What's going on YouTube? It's Jay Clem here with a video on market structure. Now, before we get into it, doesn't actually matter which strategy you trade, you do need a solid understanding of market structure, whether you trade smart money concepts, supply and demand, EMAs, Fibonacci's, market structure should be the foundation of your trading. Now, if you take this advice, what I'm going to tell you, I can guarantee you three things. You'll have one, an increase in your strike rate because you'll find yourself on the right side of the market more often than the wrong side. You also boost your risk to reward ratio because you'll be able to get in the trades at obviously, these higher low and lower high points, meaning that you have the confidence to hold these trades, to the weak structural points. And you have more clarity and understanding of exactly where the market's heading and obviously the higher time frame intentions. So before we get into the charts, I just want to obviously run over these schematics. It's obviously uptrend. This is very, very simple. This is more so how they play out in like live market conditions. As you can see, it's never as clean and simple. Obviously, we have the downtrend by lower lows, lower high, lower low, lower high, lower low, and obviously, the actual market unfolds in sort of live examples. So now we've got a basic understanding of that. We can go into our actual chart. I just wanted to break down this bit of price action here. So market structure really is the foundation of your trading. It's the first building block of your strategy. So how do we read structure? The swing high is always the highest point before the break of structure, and then the swing low is obviously where we begin that pullback. Now, usually what we can do is, in this example up here, it doesn't really show, but here you see we get that change of character here, which then obviously we can denote our swing low as being down here because we've had that shift in order flow. So, indicating to us that the pullback has started. Our swing high is always the highest point before the break of structure. So in this instance, our swing high is here, and then our swing low is obviously the lowest point of that pullback. Now, once we get that shift in the internal structure, this can tell us that obviously the pullback has finished and likely next target is obviously the weak low. Why is this low weak? Because it failed to take the high, failed to do its job, failed to pull through. So now obviously this low becomes the target. We shift the trend bullish, so buys are now in the equation. And as you can see, we start the pullback here, denoted by the change of character that we get just down here. So then obviously you can take these counter trend trades short. Just being mindful obviously to set your take profits within this range because obviously it is counter trend and you see what happens when you trade against structure. And then again here, we don't actually get the change of character in this example. Well, we do here, but obviously, you might not be looking to get shorts here, but instead you'd be looking to take the longs here following that trend, taking profit obviously at the highs. And you see when you get into these trades from obviously these swing points, they run a decent amount of pips. We change again back bearish, have a shift in trend, and then obviously we begin to pull back. We give that internal shift in structure here, and obviously then we break the structural low again here, and then here we give that change of character to let us know that the pullback has started. I wouldn't denote this as actual swing structure. I just, internal sort of structural high, letting us know that the pullback has begun, and then we can look at these levels to catch the lower high, sorry, to then obviously catch these moves short. And you can see, when you do get in at these good levels, these trades just run for, almost ever, which is great because you then have the confidence to hold these as swing trades and, catch a lot of moves in the market. So how do we know if a structure point, a swing point is weak? So we know this by if they failed to take out the previous swing high. So let's use this example here. You can see obviously we have the swing low, swing high, swing low here. We fail to take out this high, and obviously we give some lower time frame shift in order flow here. So then we can look to obviously take these shorts to target then the weak structural point. It's a very simple process. I haven't gone into multi time frame structure analysis, but I will do so in another video. I'll drop a part 2 where we sort of break down the multi time frame and how you can use the smaller time frames like 15-minute to obviously catch these positions, so you can really refine those stops down for some really good RR. Anyway, that's it for now, guys. Hope you enjoyed the video. Like and subscribe, and I will see you in the next one.